Hi guys, I'm sure by right now everyone is done with their content studying and preparing for the exam. So these lessons will focus on the June 2020 June exam paper. So we'll start on question 1. I think it was about VAT. Jack B is a sole proprietor. He sells computer and all computer related product. He is a registered VAT vendor for VAT on invoice basis. The following financial information relate to 2 months tax period that ended on 29 February 2020. So guys, when you are reading for your exam, whenever you see where they tell you that the amount exclude VAT, you need to take that into account. So, whenever they say this amount exclude VAT, the fraction that you use when you're calculating VAT there. You'll say the amount that you are given multiplied by 15 over 100, meaning 15%. Because all the amount exclude VAT. And then this is all the amount exclude VAT unless stated otherwise. So we have our income and expense. So remember, our income, the VAT that will pay on your income is like, remember, when you are selling something, you need to pay output tax to SARS, and when you are buying, you need to pay input tax. You need to claim input tax from SARS. So whenever you see income, just know that you wanna pay your output, and then expense, that's your input tax. So we have our local sales, direct export sales, expense. On our expense, we have a new computer purchase from supplier, not registered for VAT vendor. Local purchase computer related to product for export, VAT is included. Telephone, fuel, and gift for family member. So question number 1 says that calculate the VAT on local sales. Remember, the first thing we need to identify is, are we having input or output tax? So since we are selling, we'll be having our output, we'll pay our output tax. And then all the amount, since we were already told that all the amount exclude VAT. So how we're going to calculate this? We're going to take 180. We're going to say 180 multiplied by 15 over 100. It will give us 27,000. So this 27,000 is an output tax because we are selling, so we need to pay this amount to SARS. So our option there will be option number 1. This will be our answer for the first one. I'm trying to erase these numbers. And then for option 2, there's a calculate VAT on direct export sales. So remember guys, whenever you're exporting something, it means that you are bringing money in our economy. So sales will give you an exemption to pay sales will give you a subsidize for you not to pay VAT because they are already bringing money on our economy. So whenever you're exporting something, remember, you are taking the good from South Africa to another country, and then they give us money, meaning our economy will grow. So for direct export sales, we'll have it is 0 rated, so the correct answer there will be option 4. This is for number 2. To build this one, option 4, 0 rated. And then for number 3, calculate VAT on the new computer purchased under expense. New computer purchase, remember, we purchased this computer we purchased this new computer from a supplier who is not a registered VAT vendor. So since there is no VAT that we claimed when you, like, there's no VAT that we paid when you're purchasing this equipment, so we won't claim anything. Like, we're not charged VAT from this supplier since it's not a registered VAT vendor, so there's no VAT that will claim to SARS. So correct answer then will be option 5. No VAT, no input VAT, as no VAT was paid. The correct answer will be option 5. If it was second hand, okay, I think there's a question for that down there. When a VAT vendor buys a second-hand asset from a non-VAT registered vendor, the VAT vendor can claim the following. So guys, remember, whenever we purchase this, let's say an equipment for second-hand from non-VAT vendor, SARS will give us a subsidized to claim national input tax. This will lead us to option 4 for this question number 4. Option 3, national input tax. The number 5, calculate VAT on local purchase computer related to export. So remember, this computer will be related to 0 rated. So there's no VAT that will claim there since we're going to use that computer for 0 rated product. And then our correct answer for question number 5 will be option 1. And then number 6, calculate VAT on telephone expense. Telephone expense will take our 2,300 multiplied by 15 over 100, and then it's an input tax VAT, which will give us option 3. And then question number 7, calculate VAT on fuel expense. So remember guys, fuel expense are also 0 rated, so there's no VAT that we claim there. The amount will be 0. Like, we'll take the amount multiplied by 0, it will give us 0. So the correct answer will be option number 1. And then question number 8, calculate VAT on expense on gift or family. This one is like SARS doesn't allow us to claim for personal use expense. Question number 8 will be option 4, because this one is for private purposes prohibited. So SARS doesn't allow us to claim any deduction for private purposes expense. So the correct answer will be option 4. We are done. Moving on to question number 9 to 11. Guji is a tax lecturer at a local university. He resigned last year and started his own private tax business. During January 2020, he lectured at other university on a part-time basis. As at on 29 February 2020, an amount of 15,000 for lecturing was still outstanding from universities. He received the amount on 15 March 2020. So I think this one will be focusing on gross income. Okay, move on to question number 9. Question number 9 says that which one of the following is not a requirement for definition of gross income? So guys, remember, definition of gross income is a total amount received or accrued in cash or otherwise during the year of assessment that is not of capital in nature. So when we look at this all options that were given question number 9, total amount received or accrued, it's correct. In cash or otherwise, it's correct. The amount received must be of capital in nature. This one is wrong. During the year of assessment, it's correct. None of the above. Nope. So which one of the following is not a requirement for definition of gross income? It is option number 3. So because when we define our gross income definition, it says that total amount received or accrued in cash or otherwise during the year of assessment, it must not be of a capital in nature. So here they said the amount is received must be of capital in nature. So option number 3 is wrong. It's the one that you will have on your question number 9. Now question number 10 says, how much will be included in Guji gross income? Gross income, remember, so we're still on our taxable income, those first items that will include. So question number 10 will be option 4, 15,000. The amount that will include on our gross income is the amount that he only received. So question number 10 will be option 4. And then the outstanding lecturing fees will be considered to be, for income tax purposes, it will be considered to be a revenue in nature. Remember guys, like this person is getting this money from lecturing, is like he's providing service and then they give him money. So money that they receive will be a revenue in nature. Okay, we move on again to question 12 to 17. Simpu is a 45 years old. She received a monthly salary of 24,000. You need to take into account this, the words that they're telling you. Where can I highlight? Oh, it doesn't highlight. You know, it's fine. But whenever you're reading information on the question on the exam, you need to highlight the important keywords. Like here, Simpiwe is 45 years old. You need to highlight 45 years old. She received a monthly salary. You need to highlight the monthly salary of 24,000. Simpiwe worked for the full year of assessment, meaning if full year of assessment, meaning she worked for 12 months. She worked for 12 months. In addition to a salary, she received and paid the following amount during the year of assessment. South African interest received 30,000. South African dividends received 25,000. Contribution to a retirement fund for the year 36,000. Calculate Simpiwe annual remuneration for the year of 2020. Remember, like remuneration is the amount that you will receive for providing service. So things that will fall under remunerations like salary, your bonuses, your fringe benefit, yeah, those stuff will be included under your remuneration, like the amount that you receive for providing the service. So the question number 12 will just take our 24,000 multiplied by 12. She worked for the full year of assessment, so 24,000 multiplied by 12, it will give us 288,000. So the correct answer there for number 12 will be option 2. And then question number 13, what is Simpiwe annual tax rebate for the year of assessment? Simpiwe is less than 65 years old. So this one, you will look at your, like you will be given information about the rebates down here at the end of your question. You see, a person under the age of 65 years old, they pay 14,220. Person under 65, person 65 and under 75 years old, they will pay 22,014 rand. And in person 75 years old or over, they will pay 24,615. So here the question they're asking, like, how much will Simple pay? We know that Simple will pay 44,220 from the information that were given at the end of our question paper there. It will be given, so I don't expect anyone to get wrong on that question. So our correct answer there will be option 3. We've already seen it there, guys. 14,220. If Simple was 65 years old and the annual rebate for the assessment will be option 1. We've already seen it there at the end of our question. The person who is 65 years old but under 75. And then how much of Simpiwe South African interest received will form part of a taxable income? So guys, remember, interest and dividends, there are certain exemptions that we'll need to take into account there. So for foreign dividends, remember, all local dividends are fully exempt, and foreign dividends, it will be exempt if it meets some of the criteria requirement, and it will also be apportioned according to the requirements. So for South African interest dividends, we are given some certain of exemptions here. exemptions for interest and certain dividends here. It will be given. So according to section 10(1) paragraph I, a person who is 65 years or older, they will have exemption of 34,500, and the person who is under 65 years old, they will have an exemption of 23,800. What do they mean about this? Like this, they are saying whatever amount that you receive, you will need to deduct this amount, these exemptions, then the remaining amount you will include it on your gross income. So let's go and check out which amount that we are given on our information. Okay, South African interest received is 30,000. So on this 30,000, we'll just deduct 23,800. 30,000 minus 23,800. It will give us 6,200. So 6,200 is the amount that will include on our gross income. So question number 15 will be option 2. How did you get this? We said 30,000 less exemptions will give us 6,200. I hope everyone get that. And then question number 16, how much of Simple South African dividends received will form part of the taxable income for the year of 2020? So remember, all the local dividends are fully exempt. So this will lead us to nil, meaning like we'll take the amount that we are given here, multiply, deduct it by the amount that we are given. 25,000 less 25,000, it will give us 0. So question number 15 will also be option 2. What is impure deduction allowed in terms of the retirement fund contributions? Okay, hint, impure contribution to REF is 36,000. Assume her taxable income is 25,000 and her remuneration is 30,000 for the current year. So here you need to use the information that you are given on the hint. So here will fall another like the formula that will follow is like the amount contributed is limited to lesser of 350,000 or 27.5% higher of remuneration and taxable income. So how will we calculate this amount? We'll say, let me do the calculations here. So we'll say the contributed amount, which will be 36,000, is limited to lesser of 350,000, 27.5% higher of remunerations with the amount that we are given here, remuneration and taxable income, this one. So the higher there will be, remuneration will be 300,000. When you multiply it by 27.5%, it will give us 82,800. So the lesser amount here will be 82,500, but remember we contributed 36,000. So the amount our contribution will be 36,000, since the amount that we need to limit it to is higher than the amount that we're going to pay. So we're just going to pay our 36,000. So the correct answer there will be option 2. Question 18 to 29 to 21. Thomas is 57 years old. We'll take the years into account. Married to Elma, out of common property. From reading this information, you can even ask you can even like you can even see which questions will follow from this information. Like you can hear the person is 57 years old, married, out of communal property. Like which questions can we be asked from question, like if they tell us the person is married, out of communal property, instead that we will be required to calculate the medical aid. Yeah, instead that will be required to calculate the medical aid or normal tax. So Thomas is 57 years old, married to Elma, out of communal property. They have two children, aged 12 and 14. Thomas' taxable income after all the income, fringe benefit and deductions for the year of assessment is 424,000. Thomas and his employer made equal medical aid fund contribution of 24,000 each, in total 48,000 for the full year of assessment to a registered medical aid fund. Thomas has also incurred 30,000 out of pocket qualifying medical expense for the 2020 year of assessment. None of the following members have disability as defined in income tax. Okay guys, since Thomas is less than 65 years old and there's no member who is less than 65 years old, so this can tell us that we'll use that formula where we'll say contribution less than section 6A multiplied by 4. So let's go to our questions and hear what they need us to do. Based on Thomas' taxable income, 424,000 given above, what is his normal tax for the year of assessment? So whenever they ask you to calculate a normal tax, you will use this table which will be given here. Like it's not something new, it's something like you was already doing on your assignments, so there's no need to panic when you go to exam like, oh, I don't know these questions, what's going on, I'm gonna do. Like these are the things that you just need to apply in practice for you to be able to see, like, if they give me this information, what I'm gonna do with it, and so on. So based on this table, they give us the amount 424,000. So you will look on this line here, like where does 424,000 falls under. 424,000 falls under the fourth row, this one. So what we're gonna do, we're gonna say his normal tax will be 263,000 plus 36% amount of which the taxable income exceeds 423,300. So let me show you how I'm gonna do it. Number 18. So what I'm gonna do is that from the table which I've already shown you there, I'm gonna say 424,000 less 423,300 multiplied by 36%. Then I add 100,263. It will give me 100,515, which will lead us to option 3. So the correct answer will be option 3 there. And then number 19, how much was included in Thomas' income in respect of medical aid fringe benefit? So remember, fringe benefit is like your employer is paying something on your behalf. So from the information that were given, his employer only paid like 24,000 to his medical aid. So the amount which was paid was included in his medical aid fringe benefit will be 24,000, which will also lead us to option 3 for number 19. And then number 20. What is Thomas medical aid fees tax credit section 6A? So whenever I'm talking about section 6A, just know that is a medical scheme fees tax credit, because I'm going to refer to section 6A a lot. For the year of assessment, hint, Thomas is married to Elma, Like, there was no need for them to tell you this information because they've already told you up there. But since some people will forget, so it is important for them to remind you again this information, that Thomas is married to Elma, meaning is two individuals. Then they have two children, two additional members. So we're going to say 620 plus 209 plus 209. And then none of the member have a disability. So for this question, we just say 620, since there are two members, plus 209 plus 209. The total, you multiply it by 12. It will give you 12,456. It will lead us to option 2. This is our correct answer. And then, what will Thomas additional medical expense tax credit section 6 be for the 2020 year of assessment? Hint: assume for this question Thomas taxable income is 400,000. This section 6A credit is 8,000. So let me show you the format that will follow here. We'll say contributions 48,000 less section 6A, which will be 8,000 multiplied by 4, it will give us 32,000. 48,000 less 32,000 will give us 16,000. Then we add the qualifying expense of 30,000. It was given on the informations up there. Then it will give us 46,000. Then from this 46,000, you will say less 7.5% of the taxable income of 400,000. It will give you 30,000. Then 46,000 less 30,000 will give you 16,000. 16,000 multiplied by 25%. This is the amount that will include on our section additional medical aid tax credit, which will be 4,000. So our correct answer there will be option 2. Option 3, 4,000. Sorry guys. Our correct answer will be option 3. And then we're moving on to question 22 to 26. Sam is a salaried taxpayer and he receives some amount that his employer refers as fringe benefit. He is uncertain about this fringe benefit. Please answer some questions below. So which one of the following is true? Fringe benefit are included in gross income. Fringe benefit are deducted from taxable income. Fringe benefit do not affect gross income. Fringe benefit only affect provisional tax. So which one is correct? Which one of the following is true? The information that is true here is option 1, since fringe benefit will be included in gross income. And then question number 3. Sam received use of cell phone mainly for business purposes. The cell phone cost my employer 12,000, including VAT. The market value of the cell phone on the date of the purchase was 15,000. And then Sam do not pay any use of the cell phone. I received the cell phone on 1 August 2019 and the use of until 2020 year of assessment. What is the value of the fringe benefit? So remember, for fringe, the value of the fringe benefit will say for the use of assets is lower of the cost paid by the employer and market value. So our lower here will be 12,000, And then we need to multiply it by 15% because all the amount include VAT. Excuse. And remember, this person used this asset for 7 months, so we need to apportion it to the person, to the month that this person used this asset. So the correct answer will be option 1, since we'll say 12,000 multiplied by 15% multiplied by 7 over 12. It will give us 1,050. So our correct answer will be option 1. During the year of assessment, I received a loan from the employer that I used to pay the deposit on a motor vehicle. The motor vehicle is used for private purposes. The loan was for 30,000 and my employer charged 5% interest. The official interest is 7.5% and repo rate is 6.5%. So here they were trying to confuse you, since they can, if you are given repo rate, you just add 1% and then you'll be having your official rate. So they give you 6.5 and 7.5. They are trying to trick you. See, many students were gonna take 6.5 and use it. So whenever you are given repo rate, just know that repo rate you can add it with 1% to get your official rate. But since you are given the official interest rate here, just use the official interest rate, because this is lower than the, like, you are given the interest rate at lower than the market value interest. So what is the value of the fringe benefit here for question number 24? We'll say our 30,000 multiplied by the difference of 7.5% and 5% multiplied by 3 over 12, which will give us 75 rand. So our correct answer there, no, it will give us a 187.5, which will be option 4. The correct answer will be option 4 there. This one is the correct one. And then question number 25. I have worked for my employer for 15 years. On 31 August, my employer surprised me and gave me a gold watch value 21,000. What is the value of the fringe benefit? So our value of fringe benefit will say 21,000 less 5,000. From this kind of fringe benefit is assets acquired at less than market value. That's where you see the rules, like how to calculate the value of this kind of fringe benefit. So we'll say 21,000 less 5,000, it will give us 16,000. So the correct answer will be option 4 again. Then question 26. For the year of assessment, I have had use of residential accommodation owned by the employer from 1 March 2019 to 29 February 2020. I have no interest in his property. My remuneration proxy is 320,000. The accommodation has 4 rooms, is furnished, and I must pay for water and electricity, meaning the accommodation is fully furnished and they have water and electricity. So which one of the following statement is true? The fringe benefit will be calculated using the formula, and C formula will be in 17. No, the formula 17 will be used if the rooms are not 4 rooms and there is no water and electricity. And then 18 will be used when it is at least 4 rooms, but there is either water, the house is either vanished or it has water and electricity. And then 19 will be used when the house is at least 4 rooms and then it is furnished, there is water and electricity. So since the case here, the accommodation is at least 4 rooms, it is furnished, and there is water and electricity. So our correct answer there will be option 3. We'll move on to question 27 to 31. I received travel allowance during 2020 year of assessment for 3,000 per month from my employer. I make use of a card that is owned by my mother. In 2018 model, okay, it's a 2018 model that cost my mother 146,300 excluding VAT. As she purchased it from private person, a second hand on 1 March 2019, I had the use of a car for the full 2020 year of assessment. For the tax year, I traveled total of 25,670 kilometers, of which 10,345 kilometers was for private purposes. I kept log book to prove my business kilometers. I was responsible for all the costs for the vehicle and incurred the actual expense of 63,824. Calculate the determined value. So guys, remember the determined value will need to include VAT. So since this vehicle was purchased on 2018 on 1 March 20, okay, it was purchased on 1 March 2019, and then it was purchased for 146,300. We need to include VAT on that, so we'll say 146,300 multiplied by 115 over 100. It will give us 168,245. So our correct answer there will be option 1 for number 27. And then question number 28, calculate the business kilometer traveled. Like guys, this was the simplest question paper. So they gave you total here, and they gave you private, so you just need to subtract private from total for you to get the business. So we'll say 25,670 less 10,345. It will give us 15,325, which will lead us to option 1. This is the correct answer. Then number 29, calculate the actual cost per kilometer. Actual cost per kilometer, meaning we will just take our 63,804 divided by 25,670. It will lead us to option 2. This one. In question number 30, there's a little bit of calculation, but okay, let's move on there. Calculate the deemed cost per kilometer. Assume for this question only the determined value including VAT for the motor vehicle is 450,000. Hint, the deemed expenditure table for the year 2020 provided at the end of this examination paper to answer this question. So for these questions, we're only required to use this table here. You will use this table and look at where the determined value falls under. Since they gave us 450,000, so our determined value falls under the third row from the end. Falls here. So from looking at this, we'll take the fixed cost of 133,147. Let me go and show you how we'll do it on number 30. So for number 30, I'll just take from that table I shown you. I'll just take 133,147 divide by 25,670 multiply by 100, and then I add 153.2 plus 71.6. Then the total I divided by 100. It will give us 7.4304. It will be option 4 for this question. And then question number 31, calculate the taxable portion of travel allowance amount received that will be included in his income. So the amount that will be included in his income, will just take the travel allowance that he received 3,000 per month multiplied by 12. So it will lead us to option 2. And then moving on to question 32 to 34. Where's 35? Question 32 to 35. So Faiza Abraham is 32 years old and is married out of command of property to Budi Abraham. Faiza purchased a house for 1 million in 2002 and incurred transfer cost of 80,000 and legal fees of 20,000. During the 2002, prior to occupying the property, she made improvement to a house which cost her 200,000. During 2009, it cost Faiza 20,000 to repair the property. She sold the property during the 2020 year of assessment for 3 million. What is base cost for primary residence? So our base cost here will be the 1 million, and then we add all the transfer cost of 80,000, and then we're going to add the legal fees of 20,000, which will lead us to 1,100,000, which will be option 2. And then what is the capital gain for primary residence if you assume that the base cost is calculated as 600,000? So remember guys, for us to calculate capital gain, we'll take our proceeds less base cost. So our proceeds is 3 million less 600,000. It will give us 2,400,000. So the answer is none of the above. It's option 5. And then for question number 34, which amount will not be included in the base cost calculation? It will be the cost of painting. It won't be included, like that cost is not included in the base cost. So we're not allowed to include those cost of painting, because like cost of painting will be improvement. Then 35, Janelle sold her 8-meter boat in the 1 October for 5,000 and kept the selling the cost of 100,000 on the sale. She purchased the boat in 1998 for 2 million and the valuation value correctly calculated as 3 million. Calculate the taxable gain. Okay, here we will just take our proceeds of 5 million. We reduce 100,000 for the selling cost to give us 4,900,000. Then we less 3 million of the base cost. It will give us 1,900,000. That is our capital gain for the sale of the boat. So it will be option 4. Yeah guys, I'm done here. If you have any questions or you need more help on something else, you can contact me on 067 112 TAX1501. Thank you for your time.